I think that the challenges that they're seeing on the horizon are how much more quickly decisions are coming at them. Because of the limited guidance from the FDIC on AI, they're all super hesitant to engage with it deeply, while the larger banks are like, we're just going to do it.
The Digital Banking Podcast is powered by Typhone. Typhone is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh DeTar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
Your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? Outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve. It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers. So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks. Welcome to another episode of the Digital Banking Podcast. My guest today is Frank Hopkins, founder of Hopkins Leadership. So what does growing trees and growing people have in common? Now, I don't mean physically growing people like in labs or anything weird. Helping humans grow to reach their full potential and add the most value to the people, places, and environments that they touch throughout their lives. Now, I'm not going to answer that for you just yet, but that's exactly why I have the fascinating guest I have on the show today, Frank. Frank's initial foray into adult and professional life was as a landscape tree grower. Through an interesting turn of events, and by following his heart and his passion, Frank now advises community bank leaders on how to take personal and professional development and turn it into value for their organization, but more importantly, for the people and the communities that the bank serves. Now, I know that seems like a huge gap to cross to get from growing trees to people, but I promise if you stick around today, you're going to understand why. Now, while I initially asked Frank to be a guest on the podcast to discuss the trends, challenges, and opportunities he sees in the community FI space, the conversation quickly turned to be so much more. And I think you're going to see a lot of that today. So this is one of those episodes where my genuine hope is that you'll be able to walk away with tons of truly actionable, impactful thoughts, ideas, and tools that you can actually implement both personally and at your organization. So Frank, thanks so much for taking the time to come and be a guest on the show with me today.
Thanks for the invitation. I don't do a lot of these interviews like this.
I feel honored then. Yeah. No, I'm really excited to talk to you because one, I've had such fascinating conversations with you off the air, but two, I think you have a really interesting perspective. And I want to start with, let's address the elephant in the room. I'm sure people are sitting here wondering, okay, yeah, seriously, how do you go from landscape tree grower to personal and professional development coach, specifically focused on community banks and financial institutions? Like that, there's a gap there, Frank. You got to fill for us, sir.
We left the tree growing world because the industry had changed a lot and it was no longer the family community type of business that it was when we began it 20 years earlier. In that process, I have a very good friend that recommended that I look into adult development work, coaching work, because I was looking for a new thing to do to be able to contribute. And I thought what I was doing growing trees was a really valuable thing. Think of all the people that you know that do all sorts of things that are unhealthy, and that's not on the list. And that's on the list of healthy things.
Yeah, trees is a pretty That's a pretty
It's a pretty
green
healthy
check mark book. Yeah, in the
That's
book.
right. Yeah, you get a good check mark there,
Yeah.
point in heaven. So we were looking for something that we could do, or I could do, that felt as good as that. And I had a very good friend that was a therapist, and having dinner with him, I said, "What am I going to do when I grow up? Because nothing I've ever done has felt like work." And he said, "What do you want to do?" And I said, "I really like doing what you're doing." And he goes, "You can't get here from where you are anymore. My world has changed too. But the kind of work you're talking about is really coaching work." And so he and I and his wife looked at a bunch of programs and selected one. And while we were in Virginia, I began doing individual coaching. And then we moved to Louisiana to take care of my father. And in Louisiana, 15 years ago, there wasn't a lot of individual coaching going on. That was the sole domain of therapists to do that kind of work. But there was a lot of executive leadership work going on. So a whole bunch of recertifications. Later, we're working with executives in the Southeast. And working with community banks was really, I don't want to say it's accidental, but it was per chance. I had a client who was a vice president at a bank. And one day he said, "Do you want to meet my boss? Do you want to meet my mom?" kind of thing. It was a real casual statement. And I was like, "Sure, why not?" And so we walked upstairs and met the CEO of the bank. And in 2 weeks, I've got a contract with them that went on for 3 years, working with their executive team and their managers.
Crazy.
And in the process of that, I and the people that I work with at my company encountered something that was really unexpected, which was a group of people that were super integrous and super focused on their community. And some of them were refugees from larger banks, but most of them were there intentionally because they wanted to be part of what made their community what it was. And we live in Baton Rouge, Louisiana. It's a big city, not a big city, it's a medium-sized city. So it seems odd to have bankers there that see themselves that way. But you move 20 minutes out into the rural areas, and there they are again. They're the same people. So whether you pick a community bank in Baton Rouge or a community bank in New Orleans or a community bank in, I don't know, somewhere in Mississippi or Colorado, it's the same kind of people. And they're all super committed to their communities. And in their work development, many of them are limited not by knowledge or experience, they're limited by their own adult development, the stage and how far they've developed as an adult, because developing a really good leader is the same process as developing an adult. And so there are ways that we can help people that are pretty straightforward and range anywhere from owning the decisions you make to knowing what your purpose is, that help these people rise to a next level if they want to. And I don't know if that's oversimplifying it, but that's the core of it.
Yeah, no, I mean, one of the things I thought was really interesting is you were telling me about when you first got into even just the individual coaching side of things. You worked with all sorts of different business leaders, entrepreneurs, special forces outfits, you name it. And you probably could have had your pick of interesting fields to specialize in. And what was it about community banking that really just set your soul ablaze?
It was all in my previous life. I depended on a community bank for my financing. You could walk in and talk to the CEO, and he said yes. And if that was yes, then there was your answer. They are, for most of the country, you can say half the money in the country is controlled by 5 banks. That's true, but the other half is controlled by 4,500, and they're scattered around the country in small communities serving. And when they disappear, either people have to drive an hour to get to a bank, or they have to bank remotely, which is creepy in the extreme from time to time, or they have to go to payday lenders or loan companies and strip malls. And so if having grown up in and around small communities and knowing how important this is to them, then helping these institutions be better and succeed, because they're disappearing at about 2% a year.
Yeah.
So in a state like Louisiana, where there's 100 of them, in 2% a year in 10 years, that's 10% of them are gone. Yeah. And what's going to replace them? You think the big banks are going to replace them? Not really.
Yeah. I think it's interesting you use that specific, it's your specific path, but also just that specific example, which I think is such it's a good targeted kind of use case. You think about a lot of kind of family-driven businesses and industries, and they are also under a lot of pressure. look at
sure
your
they
tree
are. And-
business. Like you had
Well,
to shut down your tree business because
Well,
it became huge and commercial.
It made you huge and commercial, but if you look at, and I forget the actual statistics, but most of the businesses in the country are family-run businesses, and they need support that they can't get from a national bank, for the most part.
Yeah.
And if they don't, if those institutions aren't there, what do they do?
Yeah.
What?
Why do you say they can't get the support from a big bank though?
Okay, I'll give you an example. Go back to the nursery business. There was a tree broker that I knew in New York. He probably did $1 million worth of volume in a year, twice a year. You know how that's it in the spring and the fall, and then they don't do anything other than they do a lot. They do a lot of business development, but that's where they make their money. So his line of credit was probably $100,000 line of credit with his local community bank.
Yep.
That community bank got bought out by a national bank, and when it came time to renew his line of credit, they wouldn't renew it on his cash flow, which was enormous. They wanted property to renew it. He couldn't provide the equity because he didn't own all of his house. He didn't own all of his property. So that instant change, he wound up working it out and finding other sources of funding. But that one change changed his whole business. It could have shut it down.
Yeah.
And so it's tragic to see that. Or how about a farm that they borrow $2 million once a year and they pay it back in what's basically 90 days? Big national banks are not set up for that. They don't know how to manage that. They don't know the difference between ag lending and ag gambling. And so what these people do is they know these community bankers know their clientele. They know who they can trust with what and when. And so if you look at their loan portfolios, they're generally better than larger bank loan portfolios because the people they're loaning to are not just numbers on a sheet. They're actually people that they know.
Yeah, and that's why I say I think the ag example is a great example. It's just one example, but yeah, you think about it, we were talking about this. You used to get trees from right here in my neck of the woods, and it's 2 miles this way from my house is this super cute farm, Hoffman Farms, and it's an agro-tourism farm. So they have this super cute little train that the kids can ride, and they basically have about 3 months of the year that they're open. And they do berries in the summer, they do pumpkins in the fall, and they do a little bit of Christmas trees, and they're done.
That's right.
And that's it. But Frank, they have just exploded over the last couple of years. People absolutely love being able to shop local. We go get all of our vegetables there. We go get all of our berries there, right? When it's in season. And so you'll go there sometimes. And Frank, they've expanded. They've got food trucks. They've got the train that you can buy tickets for. It's a booming business. It's crawling with people for 3 months out of the year. And then it takes a cliff dive in late December. And then it's done for until July, August at best. And so if you don't understand Hoffman Farms, let alone agro-tourism, that's really hard to lend for. It's really hard to understand their cash flow, right?
And if you're a little community bank in Dayton, Oregon, and not that's where that is, but that's just the Oregon town that comes to mind, you're going to know him better than the universal banker at the local Capital One branch.
Yeah.
You just are. Your kids probably go to church with his kids.
Yeah.
It's just, you're part of the community and they're part of the community, and each of you matters to the other one.
Yeah. And that's what I think is so interesting about this is I think we can look at a billion different examples in life and in business. Scale is good and bad, right? There's absolutely value to scale. It's funny how many times we talk about how scary Amazon is for disruption and blah, 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 blah. But ask how many people have you ordered something off of Amazon today? And I'm like, yeah, like 9 things. And that scale is awesome because for a lot of my stupid commodity stuff, perfect case in point, we literally, my wife and I were like, wait, did you get toilet paper? No. Did you? No. Do we have any in the house? No. That's an important thing. Literally, she was watching sick kids. I'm trying to work. I got calls. We just Amazoned it. It came that day.
Right.
You know what I mean? So that scale brought that. But at the same time, it's so important for my wife and I. We love going to Hoffman to go get fresh carrots and squash and different vegetables and things. And we love supporting that local community. We love eating that fresh, real fresh local farm food.
Yeah.
So there's value in having the supermarket that has the high production food But then there's also a value in being able to shop at the local. But if we completely lose the local to scale, I argue that we're missing something as humans. Like, I hate to dumb it down that simple, but I think
You will miss it because those local, whether it's a bank is a supplier for money, right? You borrow money, their product is money. Their product also happens to be trust, but let's just say for a minute, it's hard to spend that. But you borrow money from a bank, or you put your money in a bank and they lend it out. They're in the money business. It's much easier to deal with that kind of entity if they're into your local community and depend on the success of the local community than it is to a bank that is not part of the community. The people that work there may be, but the institution is not. The people that work in that bank answer to people somewhere else, like a long way away. Whereas in the community bank, they might answer to somebody that's in the next county, but that's about as far as it gets. And so it's just a different ethos.
Yeah.
And they have different needs and they have different goals. And the goals of these community banks are generally good for the communities that they're in.
Yeah. Yeah. And that's why I think it's so interesting. That's your example, right? Is like you as a small family owned tree farm, right? You watched your business go through a huge shift and a change and had to pivot. At the same time, you relied on a financial institution that needed to be local, that needed to understand your unique family business model. And now here you are, fast forward, working with those same community banks. And I would argue that they're in a very similar boat to your tree business, right? And all of a sudden we're being pinched and saying, hey, scale is coming. Technology is coming. Small banks don't need or can exist in that environment. But here you are saying, no, they have to.
They have to. They manage half the money in the country. Mm-hmm. And so their people need to be as effective at their scale as the large banks executives are at their scale. It's a different scale, but it's the same kind of job, right? It's just one answers to their local community and their board is part of the local community, and one answers to a board that is not.
Yeah.
So what is it? It's the same, but it's different. If you're gonna, for me, if I'm gonna work and give my time, and I don't have a lot of it, I want to give it to people and to institutions that are good for their communities and that their success breeds more success in the community.
That's why I also think it's funny that the full circle of growing trees to coming back to giving back to the community. So as somebody who came from outside the industry then, Frank, and now being very intimately involved in leadership and boardroom discussions about strategy and maintaining relevancy, like what are some of the things that you've seen that are some of the new challenges that are popping up?
I think that the challenges that they're seeing on the horizon are how much more quickly decisions are coming at them. Because of the limited guidance from the FDIC on AI, they're all super hesitant to engage with it deeply, while the larger banks are like, we're just going to do it. How many of you have been to a big credit union where the teller is an AI machine? You're not going to probably see that at your local community bank. But the challenges you're running into, or how do they develop? Okay, the world's not getting any less complex, right?
Yeah.
All right. And so your ability to handle that is reflective of how developed you are as an adult, how focused you are on purpose. Are you trying to simply avoid making a mistake and maintain your current position? Or are you trying to grow continually? I guess that's the best way to put it. And so a beleaguered small bank can very easily be only trying to maintain where they are. Like, let's just keep our head above water. They've lost the thread of let's try and continually improve things. And that leads back to how the executive views things, not just the CEO, but the whole team. And so if you can get them to refocus on the purpose and remember why they're there, and it doesn't take much to do that, then they change how they look at their work. And when they change how they look at their work, they change how they look at the people that work there and then the rest of the community. And the first 20 minutes of that is a hard conversation. The rest of it's pretty easy because they know the numbers, they know how they're disappearing, they know that they're all merging because beyond a certain size they can't survive. So how do they manage their executive level development? How do they manage their teams? How do they manage their image in the community and do it intentionally so that it's not just something that happens as an afterthought? And as good as these people are, for the most part, many of them have not had any kind of training in that whatsoever. Their follow through is excellent. Their ability to find out the facts of what's going on is off the charts. But sometimes they just haven't taken that extra step. And so they'll know that there's something that's not quite right, or they'll know that there's something that they've got to work on, but they don't exactly know what it is. And it's generally, are you going to be responsible for the decisions that you make? You ask your client to be responsible. Are you going to be responsible? Who's actually responsible for this? We all like working together. We're all friends. Our kids and wives all know each other. But who's responsible for this number? Because when it comes down to it, their margins are so small that they need to, what we work with them is bringing back some of the discipline that it's staring at them. They see it, they're living with it, but taking it one step further, which is not just the bank is responsible or the department is responsible, but I am responsible. And I'm responsible because I'm committed to the purpose of the bank.
Yeah.
Which is committed to the purpose of the community.
I don't think it's definitely not a unique challenge to the community FI space, but I would say that it is a challenge that is common amongst industries that have had the ability to maintain a certain level of status quo for long periods of time. For all of my community FI friends, I know you're out there. I know there's some super innovators, some folks that have been pushing the envelope forever, and I'm not trying to minimize this, but for all intents and purposes, the banking industry has had the ability to rest on its laurels for a very long time. And if you look at, say, a brand new emerging market, right? Somebody working at a brand new AI startup, that thing is moving like wildfire. And it's got a very different set of expectations about what will allow that company to succeed or fail. Their failure rate is through the roof right now. So what happens is, unfortunately, the reality is that sometimes we as an industry, and conversely we as people, become okay with the status quo. And challenging that becomes difficult when there isn't a staring us in the face requirement. But what I would argue is that we've hit a point where some of that is now happening. Well, we've got to have the conditioning to be able to face it down. I think that's what you're saying.
And they have to have the discipline, both personal and professional, to look at the things that are coming at them, like you said, faster and faster every day, and sort through them. Which are the things that are good for our bank and our community, and which are the things we need to let go on by? It would be nice to have this, but we don't have the budget of Morgan Stanley. We don't have Capital One's budget. So there's certain things we can, certain things we can't do. But what we can do is these other things.
Yeah.
And like we were talking about AI stuff, the introduction of that into banking earlier, where a large national bank may have it in the front of the house, a community bank will probably have it in the back of the house. And a large national bank will look at it as a way to cut expenses over the long run. A community bank will look at it as a way to expand the capabilities of the people as the bank grows, so that you can do 2 times or 3 times what you're doing. So it winds up almost being like a quiet version of AI rather than a loud announcement of its presence in the bank. Because their whole thing is the relationship with the people that walk in the bank. And if the bank can make your life easier with a tool, then they're going to find a reason and a way to do it. But if they're presented with an opportunity to replace an employee in the front, they're going to be hesitant to do that because that breaks the whole bond with their community.
Yeah. Yeah, this goes back to what you and I were talking about with I think it's a bigger delicate balance than sometimes we give it credit for. And especially people on my side of the table, right? Because if I wanted to be selfish, I would be preaching from the rooftops that nobody needs branches, nobody needs people, digital and tech can solve everything. But I just don't fundamentally believe that.
Well, and there, for the longest time, that was the mantra as Chase continues to close branches everywhere. But If you use your branch assuming that it's going to bring in deposits, you're probably going to be disappointed with it. But if you use your branch as a way to promote the benefit to the community and to acknowledge your participation in it, then it becomes something different. It becomes almost an advertisement rather than a profit center, even though it is. Yeah. But the way a community bank's going to get these people in for deposits is they're going to trust them because they're going to be there for them. Your average community bank doesn't make a fortune off of credit cards like Capital One does, for example. They'll make money on the deposits that they bring in. And why do you give them your deposits? Because they'll bank you when the other people said, we don't think so. We don't know you. You haven't lived here long enough. You haven't, whatever the requirements are. And your community banker who knew you and knew your dad and or knew the business you bought and who you bought it from and knows your recommendations, he'll say, well, tell you what, we can do the loan if you'll bank with us. Of course you will. And that's where that branch comes in handy, because then all of a sudden your employees can go cash your checks there. They don't have to drive over the next town to go to the big bank. Am I making any sense there?
Yeah.
They're so integrated into their communities that it's hard to pull them out of it. And so when they look at improvements, they look at things that will improve. Of course, they have to look at it, can I afford to do it? But then if I can afford to do it, which of the things that I can afford to do are going to improve the life of my depositors?
Yeah, I think that's the crux of it all, Frank, right? Mm-hmm. Like when you're talking about, these are the conversations you're having with executives at the bank, it always comes back down to that. And I would echo that in the conversations that I have, that when I talk to folks, almost always they drive down to, there may be different stops along the way, but They drive down to the final point of what's the value this is going to add to my account holders, to my community. Right. And if the answer is small to nothing, and there's something else that could add more value, that's the path they take. And sometimes that's not the cheapest or the most efficient or the most whatever on paper best choice is. But they know it's the best choice because of the impact and the value add it will have for the people that bank with them.
Right.
And I think that changes how they have strategic conversations.
It completely changes. It changes how there's strategic plans. It changes their budgeting. It doesn't really change loan policies, but it affects it. It affects all of that. Who do we want to loan money to? We can't loan money to everybody because we only have so many deposits. And those ratios are really tight, pretty rigid. So who are we going to, with our limited ability to do what we do, who are we going to do it with? We're going to do it with the people that we believe in.
Yeah.
And so there you go. There you come back to purpose and individual decisions made by executives in the context of that purpose. And if they know what that is, that becomes an easier way to live than if they don't know what it is.
Yeah.
It's like the thing about the little community bank that every Friday afternoon, it's almost like a parade as people come in to cash their checks or bank deposits. And the little lender there that was his day, right? That's when people borrowed money. That's when people paid. But it turned out that he began to think that it was his job simply to loan money, not manage risk. And so after a while of working with the CEO, actually, it was a small bank, over about 6 weeks, he learned that. And then the next thing you know, his loan portfolio looks like everybody else's, which is performing. And the community's doing well, the bank's doing well. It's knowing why you're there and knowing what you're supposed to do and why you're supposed to do it. I don't know if that example made any sense or not.
Yeah, because I think that's one of the things that I think is also interesting about this industry, right? I talk about it a lot from actually a marketing sense, Frank.
Right.
That I think a lot of times community financial institutions forget how special they are.
They do.
And they're like, that huge thing that we did that had this massive impact on that family or that small business's life and their future, that was just Tuesday to us. And so they sometimes get disconnected from the actual incredible good that they're doing. But I think to the point that you were just making, at the same time, what happens is that we almost get disconnected from the more successful the bank or credit union is. That's actually a good thing for the community.
Right.
Right? There's real tangible tie back to, oh my gosh, if our bank is performing incredibly and we're really maximizing all of these incredible products that we offer and the utilization of them in our community, that probably means that their community is well banked, is well funded, has the ability to do the things that they need to do to grow their businesses, their families, their futures. So those two are very tightly linked.
And think how many times you've got people that are good at their job or good at their business, but they're not really good at money. And how many of these community bankers take the time, and they do take the time, to teach these people what you and I would consider basic, fundamental economic. I know you can balance your checkbook, but this is how you manage the rest of it. I see people at these banks where the clients don't have budgets. They don't have any of that. They run their business like it's a checkbook. And these bankers can work with them and help them and teach them to mature their businesses in ways that some of the larger institutions won't do because they don't have time.
Yeah. Yeah. That is also that's a whole nother road. I use my father-in-law as an example all the time. He actually was very smart and got help and got advice and did things right. But my father-in-law was a gastroenterologist, retired a couple of years ago, and came from nothing, put himself through medical school in Guadalajara, built everything up. When he retired, he was an extremely successful partner in one of the large clinics here in Oregon. And he would talk about how some of his partners, especially as he was coming into retirement age, some of the brand new partners that they were bringing on, he said a lot of them were young folks that just came out of very big, prestigious med schools with mountains of student loan debt. Yeah. And that then started getting really nice big paychecks and just didn't know how to manage it. And he said, here you have very intelligent people. These are doctors. They went through 8 years of schooling. Like, these are people who can understand complex topics and that do the hard work. Total idiots with their money.
But they never learn that. You're right.
Because this just wasn't
they never learned it.
Right? And so it's like you take that down to any number of things, right? You could be an absolutely phenomenal plumber. Doesn't mean you know how to run a business. Doesn't mean you understand how to do forecasting and cash flow analysis and how you need to manage risk as you're paying subs and vendors and managing parts orders. And doesn't mean you're an expert at that. It means you're a really good plumber. And there's nothing wrong with that. But having somebody in your corner who's, hey, I'm a terrible plumber, so I will call you when my sink breaks. But I'm a great banker. And I live here in the community with you. And I might actually need you to come repair my sink sometime. Right. So let me sit down with you and let me help you so that you're here when my sink breaks and I need you.
Yeah, or if I can't help you, let me introduce you to Jim who can.
Yeah.
And they view themselves as resources, or they become resources in their communities, as compared to I just have a job at the bank.
Yeah.
You rarely hear them say, I just have a job at the bank.
That's true. Yeah, it's so rare. And I think that's part of it too, is it's why you see that incredible tenure. I always make the joke, I love going into community banks and credit unions and doing introductions. And people always make the joke, oh, I'm the young pup here. I've only been here 23 years. And it's, when you find something that you can really have an impact in and be passionate about, it becomes more than just a job.
It does. And so working with those leaders to help them lead more effectively is rewarding in the extreme, but it's beneficial to these communities.
And that's the exact example of the plumber who's just not good at banking, right? He needs a banker to help. Just because you're a great banker doesn't mean that you've been given all of the tools to really excel as somebody leading an organization to do the great work that you are truly passionate about.
That's true.
And this is why we only be rounded at the edges, right? We need some help in all the different areas.
Right. And another thing we run into is when we run into a lot of the younger bankers, there's a level of experience at the bank and there's a level of energy in the younger executives. And being able to blend those together so that the younger executives don't leave out of frustration and the older ones don't shut them out because of their energy, learning to blend that together so that the bank continues to grow or the organization continues to grow. And that can be interesting when you look at what are almost different cultures between bankers that are in their 50s and 60s and ones that are in their 20s and 30s.
Okay, Frank, expand on that. I'd love for you to talk a little bit more about it. So what are you seeing in terms of, because I would agree, I think the data supports, like, we are seeing a big exodus of kind of the last guard, and we're bringing in the next guard of leaders at community financial institutions. And I don't know. Am I crazy to say, I guess maybe I haven't lived through centuries, none of us have, but am I crazy to say that I feel like we've got almost a bigger difference in the two worlds than we have in a long time? Because we almost have the people that grew into tech and the people that grew up in tech. And I feel like that's created very big differences.
There is a difference. And when you go to one of these community banks that's been there since 1910, 1915, and you find back office staff that have been there 25 years, guess what? There's nothing written down. How do you do your job? We just do it. How'd you learn how to do it? They showed me how to do it. And when you bring somebody new in, we teach them how to do it. The software teaches them because they can't operate unless they run the software correctly. So there's nothing written down.
Yeah.
And so you get the new people come in and they've seen all of this new technology and all these new opportunities. They're not attentive to what it costs to transition into those things, but they're not necessarily respectful of what is almost tribal knowledge of everything that operates in the bank that's made it what it is. So making the executives aware of the necessity to document and to write down what they're doing, for lack of a better way to put it, and the other people to slow down just a little bit and appreciate what they have in front of them. And will the thing that you're talking about bringing in really improve the life of the client?
We were talking about this before we started recording, Frank, that we were actually talking about it in a totally different vein, but I think it's super applicable here to this part of the conversation. Is sometimes the right answer is literally just staring you in the face.
Yeah.
And I think we all know that there is a huge benefit to decades and decades of tribal knowledge, right?
Yes.
But at the same time, there's huge value to completely fresh, new perspective,
right?
Hunger, eagerness, willingness to say, hey, let's get rid of the sacred cows. Like nothing
Absolutely.
is safe. Let's go.
Yeah.
But what I mean is, I think it's staring us in the face, and we all know that you need both of those things. Like neither one of those things in an extreme is healthy.
You take an example of I won't even say a bank, but an institution that brings in AI to operate their back office systems. Not to let anybody go, but just to speed it up so they can do more work. The AI is going to repeat everything you tell it, right? If you give it a process, it's going to follow the process every time, exactly the same way. You're not talking about a person, you're talking about software, right? AI is at the core software. And and when you operate, not if you're looking at a ChatGPT thing, but if you're looking at something that operates within a bank or a financial institution, it's going to do the same thing the same way. Is the information you're putting into it correct? If you force me to use these systems as an organization that's been around that doesn't have all this stuff written down yet, the fact that my CFO corrects an error that's in the spreadsheet that's always been there before the call report is written, and it always works out because we all know where the error is and we all correct it. What's the AI going to do there? It's going to, at scale, expand everything that we used to catch by. The things that you could catch in human time, you won't be able to catch it in electronic time. Does that make sense?
Yeah.
The minute the machine starts to make decisions, it's going to make them the way you've taught it to make them. And if you're not completely clear and completely right on your data, you're going to wind up with outputs that don't work. Now, the problem is with a lot of the people come in, and it's inconceivable to them that the data is not correct.
Yeah.
What do you mean?
Sure, yeah.
What do you mean you don't have a complete? You have to have it written down. Sure, it's written down. It's written down 10 years ago. And we've adjusted along the way. We never rewrote it. So sometimes saying you want to do something winds up being, it's like a talk I heard Steve Jobs give about there's a big distance between a good idea and a good executed product.
Yeah.
And all the work is in between there. And sometimes not having enough respect for the work leaves people disappointed because their good idea sits there. Does that make sense?
Yeah.
Or their good idea isn't executed because of the work it takes to execute it can be too much to do in the moment. So it takes way longer. Go ahead.
Oh, no, I think that opens up another interesting, as you talk about, I think that's one of the things that we have to be really thoughtful of. And I've been horrible at this in the past, and I'm trying to be more mindful of it now. Is one of the cool things that technology has brought is this ability to bring all this tribal knowledge together. Right. And we go back to the scenarios of your friend who was, what did you say? Oh, the tree broker.
Yeah.
You go back to him, and let's take the example of the bank being gobbled up out of the equation. Let's say the bank stays there, but the lender that he's worked with for 20 years finally retires.
Yeah.
And it's a brand new person that comes in that's never worked at that bank before. And they don't know, let's just call your friend Bob to make it easy. They don't know Bob at all. And they come in and they don't understand Bob's business. They don't understand why the bank's been lending to him the way that they have over the years and why they've treated the way. But if we can build a knowledge base and somebody can very easily query, hey, tell me about all the loans that we've given Bob over the last 20 years. And what was the logic that went into some of these? And somebody took the couple of minutes to jot down, like, oh, hey, we know a lot about Bob's tree brokerage business. And he looks real scary this time of the year. Don't worry.
Right.
He's going to come around, whatever. And we've got 20 years of data to back this up. And now it's not even just my hunch. Here's actually the data. And here's every single loan we've ever written on him. And you can go query against all of those. And you can see that he's never had a default. He's never had an issue or a late payment.
Right.
Now you can spin up that next generation to be much more relational because they can bring kind of those decades of generational knowledge in much quicker. But to your point, like if it dies with me, it dies with me.
Right. And how do I convince you, who's been at the bank 25 years, that you need to take the time, because you don't have any time to hardly do what you're doing now, to take the time to document everything that you're doing and every step along the way for everything you do for a month so that we can capture everything that you do.
Yeah.
There are some, I'm not going to say limitations, but there are some challenges that they have that they're pretty heady challenges to handle, but they're handling them slowly, one at a time, and they're being very careful what they bring in. And from a value standpoint, and usually it's like I say, it's value to their customer base. That they're more concerned about that than the value to them. It's not, will it make money for us? It's, can we afford to do it if it's going to give our clients this much value? Does that make sense?
I was talking to a bank CEO recently. He was a newer CEO to the bank. And he was talking to me about one of the things that they did that I thought, one, probably terrified his poor staff, but now I think they're seeing the vision behind it and they're liking it. But he was saying one of the things that he did when he came in was he said, I did it in a very non-accusatory or negative way. He said, I just inserted myself into every single process that our bank does.
Right.
And I just sat with everybody and said, I want to understand the process. And he said, I'll steal one of your examples that you just used, right? Every single month we go through and we create this report, but it puts the comma in the wrong place, but we know it does. So I just go and move it. And he would sit and watch and he would go, hey, wait, why did you just move that comma? The software program has been putting it in the wrong place every year. I just always move it. And he would go, time out. Okay. What's our relationship with the vendor that provides that software? Oh, it's whatever. It's great. We've got a good resource. Let's call them. Call them up. Hey, this thing puts a comma in the wrong place. No, we didn't know. Now you do. Let's move it. And he just systematically went through and solved all of those silly little things. But at the same time, what they found were then lots of silly little things, but also the silly little things open up conversations of, okay, is this software actually even the right piece of software then? If it's doing something silly like that, what else is it doing? Oh, maybe we actually need to do a complete evaluation of the software that's doing that. And he said it just opened up so many conversations to go through and just sit with each vertical and say, walk me through every process.
And an executive like that will find that there may be a department that has two separate sets of software that almost do the same thing, that they don't need but one of them, and they use the one they need. The other one sits there and they pay for it at $20,000 a month. But nobody bothered to say, we don't use this anymore. Did this get canceled? Just so it's things like that.
Frank, we can't even remember to do that with our Netflix, let alone.
Right. Yeah, I hear you there. But the other thing you run into, have you ever heard about, what was it called? The 5 monkeys experiment. Have you ever heard about that?
Yes.
That's where they put the monkeys in the test area, and there's a ladder with a banana on the top,
Okay, I don't know this.
So one of the monkeys climbs up to get the banana, and they spray all the other monkeys with cold water. So pretty soon, the monkeys are preventing themselves. Nobody wants to go up and get the banana, right? Because everybody's going to get wet. It's miserable. So what they do is they start to transition the monkeys out. They take one of the ones that knows what's going on. They put a new one in. The new one, of course, sees the banana and goes to the banana. So after time, they get to where they're preventing the new monkey from going up to get to the banana. When you're 10 or 12 monkeys into it, none of them were ever sprayed with water because they stopped spraying them after the last fifth monkey was gone. But the monkeys will continue to prevent the other monkey from going up to get to the banana for some reason, they know not what.
Huh.
Because it's built in. That's the problem with some of the tribal knowledge. We've done it this way always.
Yeah.
Because we did it this way always. So a CEO like the one that you're talking about asked the question, why do we do it this way?
Why are we getting the banana?
Yeah, because this department wants it done that way. Okay, so he goes and asks that department, and they go, we do it because that department wanted it this way. And he goes to ask them. Neither one of them wanted it. So there are things like that you couldn't imagine happening in a large-scale institution that happens in these small organizations, and helping them to see that can happen.
You know what I think is funny, and this is why I actually think small community FIs have the advantage here, is I would argue that probably happens way more at Bank of America than it does at ABC Community Bank.
But once they see it, they go, of course we can stop. Of course we shouldn't do that.
Possibly. I don't know.
No, in a small
yes, the small, yes, exactly. Yeah. The big one. Yeah. I mean, I use the joke all the time, and I don't know, maybe I'm going to shoot myself in the foot and somebody's going to call me and give me a hard time over this because they actually work at Bank of America, but I travel a ton for work.
Right.
And I live on the West Coast. And so I fly Alaska Airlines. I try to stay pretty exclusively Alaska, so I build points and status and all those things. And a part of that, to be able to really maximize it, you've got to have the Alaska Airlines credit card. So I've had the Alaska Airlines credit card for a decade.
Ever, right, yeah.
Yeah, it's issued through Bank of America. I am not even kidding, Frank. Still to this day, I actually got one just recently. About every 6 months or so, I get a piece of mail from Bank of America telling me that I'm pre-approved to open my first Alaska Airlines credit card.
Right.
I'm like, you knuckleheads, I have had this card for so long, and I even use it.
Or imagine when they send you just for the straight Bank of America credit card, and you're like, you could have saved yourself how much money?
Yeah, exactly.
Think of the expense of that.
Yeah, exactly. And then think of the expense of that at scale. And then think of what I think the other part of this, and actually the way I use that example is think about the now brand perception, right? My brand perception of Bank of America is they don't know two things about me, and they don't care, right? Now, am I saying that my local community bank or credit union won't make the same or similar mistake? No, none of us are perfect. But they've got a lot more cards in their deck that make me believe that they still know and at least care. And if I were to, have the credit card from my local community bank, and then they sent me the piece of paper saying, you're pre-approved for your first credit card with that. And if I told them, I bet you anything, they'd be mortified and somebody would fix that.
And
If I call Bank of America and I'm like, hey, dummies, I already have this card, they're going to be like, okay, cool. It's going to go nowhere.
Yeah. See, Bank of America hasn't made any investments in a Goodwill bank account for you, whereas your local community bank makes regular investments in your Goodwill bank account so that when they make a mistake, you're like, okay, Bank of America make a mistake on your credit card and you're mad about it. How could you make this mistake? Your local community bank makes an error, and so you call up the branch manager and say, Harriet, look, there's an error on my credit card. What's up? She apologizes, she fixes it herself or gives it to whoever in the back office that fixes it, and they call you later in the day and say, we pulled that off.
Yeah.
Or, no, that was your wife that did that. Do you remember that? And you're like, oh, yeah, I'm sorry, I forgot. But there's interaction back and forth that you do pay for it, but you pay for it because in some cases, the larger banks can give you products. Either they pay more or it costs you less.
Yeah.
But there's a community banker that I know that says, I will never be the cheapest loan. You will always be able to find a loan at a lower rate than I'm going to give you, but I'm going to be there on the weekend when you need me. You know, when you've got a problem with your loan and you're approaching day 90 and we know you and you tell us, we'll work with you.
Yeah, so, I'd like to think I'm not alone in that customer service still matters. People still really care about that. I'll spare you all the details, Frank, but 2 nights ago. It was, Cyber Monday. I came out of my office all in a tizzy to my wife, and I was super frustrated. And it was because when self-service and tech works, it works and you don't think about it. Right. But then when it doesn't, or it doesn't solve your problem and you need a person, then you really need a person. And then especially when you get to the person, the interaction you have with the person at that point has a huge impact on your perception of the brand. And I was booking, people that know me well will know exactly where I'm going with this, but when I travel for work, I will go out of my way to stay at Hilton properties.
Okay.
And if it means that I have to walk further than everybody else or whatever it is, I'll go out of my way. I'll stay at the Hilton. And it's because my wife and I got married at a very specific Hilton property, and we like to go back there on our anniversary. And I like to use my points to go back there. Right. Because it's about the only way we can afford to go back there. Yeah. And so long story short, I went to book, and the online system just wouldn't let me do what I needed to do. And what was, quite honestly, a very realistic, reasonable thing that should have been able to be self-serviced. And so I ended up having to call Hilton, and that was that first escalation to a human. Right. And I get the person, and she goes, "Hey, I can't solve your problem, but you're a Hilton Diamond member, so we're going to transfer you to the Diamond desk. We're going to get you to a specialist. They're going to take care of you." I get to that person. Long story short, she can't help at all. I told her, I said, I'm going to be really honest. I've been really frustrated with Hilton over the last couple of years. You guys just keep getting worse and worse about customer service. You can see I've stayed over 100 nights this year at your properties. You can do the math on how much money I've spent with you. Sure. Right? I remain loyal to you. I go out of my way to stay with you, all for this one property, and you treat me like garbage. And I told her that, and she goes, "Thank you for your feedback." And I said, "Okay, so is that the end of it?" And she goes, "Is there anything else I can do for you?" Yeah. And I just hung up, Frank. I reached my wit's end. And I told my wife, I was like, we're moving to Hyatt. I'm over it. Hey, you
want to Marriott. Goodbye.
Yeah. Right? And it's just, and I think that's a long-winded example of, that goes back to what you and I were talking about earlier of, we're in the day and age where technology has to be a great equalizer of certain things. It has to do a certain set of transactional types of things. If I'm just going to book a Hilton, I can do it self-service. I can go on, I can use the technology. I don't have to call somebody anymore. I don't have to get an agent to do that. So that provides benefits and scale. It allows me to have that relationship with them. But there's still that time where it's more than that. And it's those moments where people make the brand choice. And that's the opportunity for the community.
Or like, you find this charge on your debit card, and so you call the number on the back of the card, and they suspend your card on your Alaska Airlines card. Do you hear from anybody?
No.
You have to call them to get another card, right? They suspended it, and maybe it says push 2 if you want a new card, and you forget push 1, and you're out of luck. As compared to the community bank, that you do the same thing. You call the same number. It says that your card is now not going to operate. And in 15 minutes on a Saturday, you get a call from the branch manager who just wants to make sure that was you that canceled your card. And by the way, do you want me to call Jeanette at home to make sure that she'll log online to make sure that they got another card for you on Monday morning when you get in, if you can go in? That's not something that you pay for.
Frank, you'll find that.
But you can get that. And if that kind of service is important to you, suppose the woman at Hilton had said, "Oh my gosh, Josh, we're so sorry. I really can't help you with it, but I understand how you feel that way. And I'm going to send a note to my supervisor that a Diamond level member was really unhappy about this process. And if there's any comment comes back, I'll be sure and let you know." How would you have felt?
Totally different. Yeah, it changes everything, doesn't it?
Yeah.
You might find this kind of interesting. Going back to our AI and technology discussion, I recently took every single episode of this podcast, which I think at the time when I ran it was like 137 episodes.
Wow.
I took the transcript of every single episode, which in spoken form totaled just under 300 hours of spoken content. I put it all into Google's Notebook LM, which
Okay.
can now handle over 300 large complex documents.
Isn't that amazing?
It's crazy. And I had it run an analysis, and I'm working on some content that'll come out of these analyses, and I'm gonna have some LinkedIn content that'll come out of it if you follow me there. But what came out of it was absolutely fascinating, Frank. And what came out of it, what I thought was interesting, was what it picked up on were common topics, common trends, things that people we just universally agreed on across 130 plus different guests from all over the world, all different backgrounds, all different sectors. And one of the things that it picked up on that I personally thought was interesting and cool was it said, based on the conversations of the podcast, it's very apparent that especially young American consumers treat financial services as a transactional thing.
Right.
Until it isn't. And
Until
then it
they need it.
becomes so important.
Right.
And they want somebody that's personal, that's local, that's in their corner. And I thought that was really cool that out of all of that, out of 300 hours of spoken content, that was one of the main things that it plucked out of it, was just how important the human connection of all of this is. This is called the Digital Banking Podcast. We're literally talking about technology. But I thought it was fascinating that out of all that content, it pulled out that like people actually crave for a connection with humans. And when it matters, it really matters, and they want somebody in their corner.
And so then, and in the face of that, you find some people that wonder, how can a community bank ever exist in this modern world? And that is the reason, because you may not need that. You may not care that they remember your name when you walk in. It may be completely irrelevant to you, but that call back on Saturday about your debit card mattered, especially when you were in Utah, right?
One of the things that I really wish that average American consumers would understand, and because I didn't until I started working in this industry, is just how stinking hard employees at community financial institutions work for people. Like,
They do.
The number of times I have seen folks on calls at 2 a.m. on a Saturday and solving problems. And then you look online and you see all the negative comments. I can't believe this happened to me. I'm like, man, I know that like Susan was up at 2 a.m. solving that for you because she cared. Not because it was her job, it was because she cared. Like, you need to know that.
Or how about the way they work together? We had a hurricane here years ago, and one of the banks all the banks were shut down basically. And but what happened, the real problem was they could operate manually, but the company that brought them their cash couldn't operate. So imagine the bank, all the cash is gone. What do? They called another bank CEO friend and said, what am I going to do? And he goes, how much are you going to be short? He goes, I don't know, $200,000. He goes, meet me here and I'll have a sheriff there and we'll take the money out of our vault and we'll bring it to your bank so that you got the cash on Friday morning that you need to have there. Now, maybe that kind of problem doesn't happen at the large banking level, but at the small banking level, if they're going to work together like that, how can you not want to help them be more effective? And how can you not encourage that behavior in executives? Like that very executive that you were talking about that's going through simplifying and organizing all of the units that work under him is the very same one that may have that problem. And if he's built a relationship with his other community bank CEOs, then when he needs them, they'll be there. And that's the thing that was lost in the agriculture industry that I left, is that it quit being about people working together and only about me solving my problem, even if it's at your expense.
Yeah.
These guys all know that they can't operate completely independently.
Yeah.
They have to be, like you go to their state organization and they all know it. All in Louisiana, all 90 of them know each other. So it goes back to the why. How could you not want to work? If you have a skill that they need, how could you not want to work with them?
Yeah.
Because of the good they do and what they do for each other.
Yeah, I love that.
And so when you guys bring them new technologies, if you can introduce it in a way that this is how it's going to help your clients, their ears are going to perk up right there. If you tell them how much money it's going to save them, they're going to go, yeah, I'm doing all right. I'm doing fine now. Thanks for asking. But this is how it can help your client. I heard a fintech guy talk about his program to one of these banks, to a senior lender, and he started off talking about how much money it was going to save the bank. And you could see it was like in a blink. You could see him. It was almost like he shook his head for a second. And they said, but more than that, when your applicant wants to apply for the loan, he's only got to do it here once, just once. There's no extra paperwork to do. It's all right here. Think about how it's going to make your interaction with your client smoother, more effective, more quick, all that sort of stuff. And all of a sudden, he had the guy's attention. It had nothing to do with it, whether it was going to save the place more money or not. It had to do with, would it make it easier for the person to apply for the loan? Yeah. So it's just a different way of looking at things.
It is. I think that's funny enough, going back to what Notebook LM pulled out of the podcast. That was definitely one of the big recurring themes, is that this is a very special industry that I know it's technically the credit union motto, but I'd like to think that community banks can use it too. It's the people helping people motto.
Yeah.
Right? And this is how this whole thing was founded in the first place. Look at community banks and credit unions. Most of them started with families and friends and colleagues sitting around the kitchen table going, hey, you need a loan. I got a couple of extra bucks. I'll lend it to you. Pay me back with a little bit of interest. And hey, how about we turn this into something a little bit more legit?
Yeah, or half a dozen business owners in a small community can't get a loan from the larger bank 50 years ago, and they're like, hell, we'll put our money together, we'll start our own bank.
Yeah.
And there they are.
And there they are.
There they are. Or an investor group buys the charter of a failing bank in some little rural town and brings it to an area where it can be profitable. And the next thing you know, there's another community bank that's profitable. Oh, by the way, the branch in the little piddly town, it's still there. It's still running. They didn't close it. They left it there.
Yeah.
And it's an amazing industry to be in. And it's humbling to see how hard they work and the challenges that they run into and how they're in, as the world is changing really fast, how they're changing with it and how they're picking carefully through the things that are available to them to select the things that are going to make the most impact with their client base. An ag bank picks different things than an urban community bank. But
I think, again, as somebody who selfishly would want to sell more software, like my goal, I think my hope, not my goal, my hope would be that we leverage technology and all of these advancements in scale and all of that to not just do more, but to do better. To do more of what we do that's really special and really unique and that understands our communities and supports them and meets them where they are. And yes, like we were talking about, there's value to scale, right? And I want to see our community institutions grow and scale and do more good, but with keeping the heart of that good at the very center of it all.
And a lot of that, as they transition from where they are to where you're talking about them being, is the integrity of the data that they move from their existing way of doing things to this different way of doing things. And the acknowledgement, if you can almost acknowledge what a challenge that will be for them, you become their partner and not their vendor. Mm-hmm. Does that make sense?
Yeah.
Because when I'm working with you as a bank executive, I'm viewing myself as your partner. I'm not providing a service. I'm partnering with you to help you achieve the goals that you have. And just like they're partnering with their clientele to help them achieve their goals. You know?
I would say the same thing. No, it's a trickle-down effect. And I think that's why this whole industry needs to be very ecosystem-driven in that sense. And I think that's why the cooperation model is also so incredibly important, because it is. We all really do have to work together with that in mind, Frank.
And so there you go back to adult development again. Am I worried about a purpose that I'm trying to serve with the institution that I'm in, or am I just worried about not making a mistake? And if I'm doing that, I'm just maintaining where we are. Meanwhile, the world's changing, the economy's growing, the community's doing whatever it's doing, and we're not keeping up anymore. And the minute we're not keeping up anymore, the board decides we don't need to be here, or we get bought out by another bank. So helping them keep find and focus on a purpose greater than just what they're doing right now is important.
Yeah. Frank, I had to write this down because I loved what you said.
Okay.
You said this to me earlier. You said there's no great way to be safe and no safe way to be great.
That's true, not just when you think about it, right? Because the minute you have something new that you're going to do and you introduce the idea, you're not safe anymore. But if you maintain that position of safety, keep your mouth shut, keep your head down, do the same thing you do in the same way without asking a question, you're never going to achieve any kind of greatness doing that. Not for yourself, for your organization or your community at large. And how they lead affects their community, and the profitability of their community affects the bank. It's so symbiotic.
Yeah.
You think it was like agriculture.
You think it was like growing trees. No, yeah. Thanks for bringing it all the way back.
If you look at the community like the ground, for a farmer, the ground never lies. If he does something wrong, the payback is immediate. If the bank does something wrong, the payback's immediate.
Yeah. Yeah, because like you're saying, it's built on a foundation of trust and of adding value.
Character and integrity. Yep.
That's it.
That's it. And math. Some good math.
And some good math. Add that in for our CFO
That's
friends.
right.
Yeah.
That's it.
Frank, it's been an absolute
I hope this has
pleasure
helped.
chatting with
Thank you. It's a
It
pleasure
has.
talking to you too.
Yeah. Before I let you go, I got 2 final questions for you, sir.
Okay.
Where do you go to get information? How are you staying informed? And what types of sources are you relying on to help keep yourself and your banking industry friends informed on what's going on?
Oh, I'm pretty light-fingered with the ABA magazines that my bank clients on their bureaus. But no, the ICBA magazine, the ABA magazine, I listen to Bloomberg like everybody else does, online sources like that. From a leadership standpoint, there's new stuff coming out every day with that, new ways of looking at things. So I don't know if that's really answering your question.
Any
with that-
influential leaders that you like to follow?
I follow Jamie Dimon pretty close because he's not going to softball anything.
That's true.
I think
Give him that.
he's going to say it like it is, whether you like it or not. And he's one of the ones. There are local leaders around here that we follow pretty close. Bank CEOs that are every bit as deep as he is. They just run smaller institutions.
Yeah.
But from a leadership standpoint, people like Bob Anderson and Ryan Holiday are great people to follow. But from a financial standpoint, it's hard to beat somebody that'll tell the truth all the time and listens to his staff. And when they tell him it's not safe in the face of an opportunity to make a lot of money, he takes their word for it.
I will give him a lot of credit. I agree.
Think about the integrity there. Whether you like his organization or not, his level of integrity is uncommon at that scale.
I would agree with that.
You know.
Yeah. Well, Frank, if people want to connect with you as a resource, how can they connect with you and how can they learn more about Hopkins Leadership and what you're doing?
One of the easiest ways to go to our website, hopkinsleadership.com, and there's also a newsletter that we put out, and there's regular blogs that we put out. You can find me on LinkedIn, or you can find the company on LinkedIn. And so those are great places right there. And my email and usually my phone number is on there, so I make it easy if somebody needs something. And just because you call me doesn't mean that I'm assuming we're going to do business. Just if somebody has a question, just call.
I love that. Frank,
We can't do what we do unless we're available to people when they need us.
yeah, my COO said something to me very early in meeting him almost a decade ago, and it's always stuck with me, Frank. And he said, I'll remove his colorful language, but it helped illustrate the point even that much more. He said, if somebody calls you 2 a.m, they don't care about the weather.
That's right. And they don't care
That's not
what
why
time
they're
it
calling.
is.
They're calling because they need your help. And to be
That's right.
the person that they call when they need help is a pretty big honor. And that's with me.
That's the way we look at it. It's an honor anytime anybody picks up the phone or sends us an email because they could have sent it anywhere.
Yeah, exactly. With that, Frank, I really appreciate
Nice to
the
talk to you,
time.
too.
Thank you so much for coming and being a guest
Take
on the
care.
Digital Banking Podcast.
Thank you. It's a pleasure to be here.
Thank you for listening to the Digital Banking Podcast, powered by Typhone. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.